Morning, welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. Okay, so yesterday we had some data out in the UK and the US. The UK data being in inflation data, CPIs, RPIs, PPIs, and it came out at 9:30 BST, and basically it was a massive miss. UK CPI data came in at -1 month-on-month after flat expected, and 2.6 year-on-year after 2.7 expected. The core came in at 2.4 year-on-year, and it was expected 2.5 expected. So disappointing inflation data for those expecting a Bank of England hike, and this was shown very, very quickly in the sterling market. As we see, cable GBP USD was sold off initially, and for the rest of the day from 9:30 until 1:30, 88 pips, where it found some sort of ground and has now been in a very, very tight range overnight. But that was a big miss for the UK from an inflation point of view. Now we look at this UK sterling as a longer term trade, and I'm looking at the daily one here. And if we see that the trench that we kind of consolidated in after Brexit, before the flash crash of breaking down, we were back in there. We've now broken through that trench, or that support line, which was holding it in this area here, kind of us getting back to some sort of norm, and now it opens up this new area here, which is obviously good for the exporters, but it's in terms of the Brexit, it could work out, but it's territory that we looked like the chartings, the upward trend channels all look like we're going to break up and consolidate in here. And now the data's been poor. Carney has gone back on his hawkish rhetoric, and we're looking to at this zone now, and commentators have been saying 120 and 115 are potentially our lows before the end of the year, so you have to watch this very carefully. But that was it was an interesting trade, the sterling, for a while, because it was showing, I'm just going to indicate with some lines here, it was showing some upward trend momentum, and it was, like I said, I thought it was going to consolidate in this area here where we blew out after Brexit. But the data and the dollar bounce has played into short-term traders' strategies, and therefore it looks like there could be some more downside here, at least until the 125 level. So there could be quite a lot of legs in this to the downside at the moment, just on the dollar resurgence, and sterling's actually, the data is really, really quite poor. What we had out in the afternoon was US retail sales, which kind of compounded the downside movement in sterling and in euro, in fact. So survey for our retail sales was 0.3. It smashed it, came out at 0.6, and then it was the revision was up from 0.3 from -0.2. So all across the books. A great hit, and as you can see here, euro sold off while the dollar appreciated. So I mean, this is the retracement is this is the initial trading over the data, where people are going, oh yeah, it's retail sales, it's a positive figure, therefore it's positive for the dollar, right? But then they realise that actually, if they want to have any risk assets or risk in the market, then they want to get back in the euro, and this is where this is retraced back up here. So an immediate reaction followed by a full retracement, which is just is part and parcel of the market at the moment. Euro, if you're going to go against have trades with the euro, it'll probably be euro sterling rather than euro dollar. The sterling looks like it's definitely depreciating, and the euro looks like it's just holding firm at the moment. So any sell-off in the euro is being very aggressively bought back up. People are buying the dip at the moment. They still have faith in it, whereas sterling is just starting to lose interest from a lot of long-term players, and it's just looking to kind of dwindle off. So I mean, that was the data, the retail sales data. A big positive for the US. and then we saw that. But in this trade here, we can see what's happening in the euro. It's been very, very. It's got a lot of people in there buying dips. It's got a lot of people keeping it to in a nice sort of area where it's not dropping off too aggressively. If you look in the long-term chart and just blow that up there, we just bounced off what was the support there at 117, but we've really only actually moved 200 pips max in the last 14 days, which is nothing. And if you look at this, the upward trend pattern is still there. And we're just having a small pullback, but I think euro is going to hold in here. It definitely looks like it from the market in terms of participants who are buying dips and who have any opportunity to get on a lower prices. They're definitely jumping on that. So what do we have today? Well, we do have crude inventories that we have every Wednesday, but the biggest thing that we have today is FOMC minutes. So the Federal Open Market Committee releases minutes of its policy setting meeting held 2 weeks ago. So we got some understanding when the policy meeting happened, and this is just basically the documentation or the detailed insights regarding the FOMC stance on monetary policy. So all FX traders will be looking at the release today just to see how it would affect interest rates. I'm just reading some news on the wires here. Some people are expecting the minutes to provide further information regarding the timing of balance sheet normalization. So when we say balance sheet normalization, we mean when the Fed is going to clean up all of its deficits, all of its IOUs that owes, and some are saying they reckon it will be likely in September, and some are also saying that there's still room for another hike in December. All very interesting. Someone's commented about Fed fund rates have not been changed. But it's summertime. Why are you going to release anything to jitter the markets when no one is around? Just hold the status quo, keep blagging it as you are at the moment, and then when everyone's back and got their thinking hats on, hit us whatever you got to hit us. Don't release balance sheet normalization dates. Do you know what I mean? It's just. Don't talk about additional policy rate hikes or inflation data and how you analyse it and how it's going to affect how you will increase rates or whatever. How you're going to deal with it with the whole system. I find it very strange that we have these releases. They are after every 2 weeks of a decision, but why would you go hard in the tone on this one when there's no one at their desk? You go low, and then you've got Jackson Hole in September where everyone's going to kick off. Everyone's waiting for Draghi to kick off there. So just hold the status quo. Don't try and give the market too much to kind of go and get crazy over, because we know that this is what they'll do. The market will pick up a specific word or pick up something incorrectly, and all of a sudden we start having gaps in the market and not regular business, regular efficient price trading stability. It just goes all crazy. So I think she should urgently be cautious and not try and give away too much, because markets are thin and people are just got trigger happy at the moment. So that's at 7:30 tonight, EST. So from the front lines here, have a good trading day. I'll speak to you tomorrow.